This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Joining us today is John Wood, the CEO of Harland and Wolff. It's the first time we're speaking. John, welcome onto Stockbox. How are you doing?
Fantastic, thank you. And look, it's great to be here. I know we've spoken about it for a while, but it's great to finally get here and have a chat.
Indeed, it is. I wonder if you could just perhaps introduce the company really to our viewers, what Harland and Wolff does, and a bit about its history maybe as well.
Well, look, I think it's probably worth starting at the beginning. Harland and Wolff was Infrastrata previously, a company that owned the largest gas storage project in development in the UK with 500 million cubic metres. But look, it was a programme when I came in and took it through FEED that we looked at and thought by the time we get through all the regulatory compliance and get the licences we need to get the construction underway, it's going to take several years. So we need to actually get some more work underway and some other revenue coming into the business because it was a pre-revenue company at that time. So with my background being in ships, fabrication, oil and gas, and heavy engineering, we took the decision to acquire Harland and Wolff in Belfast as the first shipyard back in 2019. Moved on then to acquire the Appledore shipyard in 2020. And then the ex-assets of Bifab up in Scotland, one in Metal, one in Arnish, which really, gave us a shipyard group that was capable of developing across the five markets that we wanted to work in the six sectors. And why 5 markets and 6 sectors is so important is it gives us resilience if one of those markets go away. I mean, the markets we're in is defence, oil and gas, renewables, cruise and ferry, in commercial. And I think the thing is, if a government changes perhaps and defence spending goes down, you also know you've got the oil and gas market, you've got the renewable market that's booming. So really, out of those 5 markets, we only need 2 to be buoyant at any one time. And I think the services we provide is everything, complete life cycle from the start of the project, which is the engineering design, through the fabrication and the engineering, moving on through to the in-life, through-life support, conversion, and then ultimately decommissioning at the end of the project life cycle. So, there's those 2 parts of the business. One is the gas storage, and one is the shipyards and fabrication facilities. That all the assets we acquired were all previously in administration, all previously unoperable. So we sort of brought them all back to life. And we're really now 3.5 years into a 5-year program, and we're beginning to see the whole enterprise come into life,
Okay, so really the core of the business is with shipbuilding and this gas storage. I want to talk about the shipbuilding in a moment, but can you just tell me a bit more about the gas storage and what angle are you coming from there? I mean, I read something that I think the UK only has about 2 days of gas storage at full capacity or something like that when it's at full capacity. But what is your business angle here on the gas storage side of things?
Well, look, I think the gas industry's changed dramatically. I mean, the war in Ukraine, Russia cutting off gas supplies and things like that. It has changed the whole market sort of in the last 24 months. And I think when we started off this project, we went on exactly that angle, the lack of gas storage in the UK. And I think we're now the only shovel-ready programme. And I think as time's gone on, the market's sort of moving away slightly from gas, looking at moving towards hydrogen. The programme at the moment we've got going through, and I think we're up to the final stage, we had a judicial review for the marine licence that was heard in the Belfast High Court a few weeks ago. Look, we're still fairly bullish. We think the country needs a programme. We think everything was done certainly from the company point of view. We'll sit back and wait on the judgment when it comes through, which we probably expect early September. And look, if the judgment goes in our favour, great, we crack on. If it doesn't, then look, we just go back and resubmit the few minor technicalities that we may need to. I don't think it's certainly not terminal for the project. The project will go ahead. But I think what's more interesting now is the technology, and obviously it's subject to more regulatory approval. But I think with the development of hydrogen, you then look, instead of transferring gas back through the interconnectors, if you actually use the excess wind, generate hydrogen, store hydrogen in the caverns, and then now even potential, a study we're looking at is to convert the hydrogen back to electricity again and sell the electricity back into the grid. So this project, has got probably about 5 or 6 different potential uses. And I think what's becoming more interesting now is we've had one approach for the acquisition of the project, which is short of a view of what we would consider disposing of the project at. But, we've got 3 or 4 others sniffing around, making noises. But, there's certainly many multiples of what we've invested in that project at the moment, which is about 15 million. And I think you look at that program and you look at our share price, and we don't believe there's anything in our share price being priced in for either the sale of the asset for someone else to develop or for us to develop it in future ourselves. So look, there's lots of value to come from that project,
Okay, so potentially you might be looking to dispose of that if the correct offer comes in. Otherwise, you will be continuing, and it's not just as in natural gas, it can be hydrogen or other forms of energy storage. Have you got any projections on sort of return on investment from that project that you can share today or not?
Look, I think we did do 3 years ago. We looked at the full life cycle case of it, and developing it, and the return on investment was phenomenal. I think it would be naive now with the inflation that's gone on to look at the construction costs and the potential changes that we're looking in the project to quote that ROI at the moment. But look, given the scarcity of gas, the scarcity of electricity, and yet the way that the country goes on about renewables being the saviour of all the country's problems, clearly it's not. Clearly there's a transition period. And I think that's where the storage project really fits in nicely in that cusp. So I think the return on investment, we believe, will be improved from what it was the last time. But we're at the moment waiting on some firm pricing coming in before we publish that information. Probably after the judicial reviews being announced, we'll update the market on that detail, Okay. But I think, look, it's a really exciting project that's got bipartisan support from the politicians. It's got support in Northern Ireland politically. It's got support in Westminster politically. So look, it's a project that's it's good to go. And ultimately, given the scarcity of electricity in Northern Ireland, look, there's a real chance that the lights may go off there. Where it came close last winter, I think every winter that progresses, it gets closer,
Yeah, indeed it does. The problem's not going away anytime soon, so the market can await some further detail on that project. Let's move then to the other side of the business, of course, the shipbuilding. You talked about the 5 different markets there. Of course, recent big contract win from the government, wasn't it, in defence there, building 3 fleet support vessels. Is that right? Could you just explain a bit more about that deal?
Well, I think that deal was phenomenal for the company, and really a company that had 4 shipyards that hadn't built anything or hadn't serviced or dry docked anything. And I think we've got 2 of the largest dry docks in Europe, the 2 biggest dry docks in the UK, and the largest undercover dry dock in the UK. So I think all our facilities give us around 52% of that footprint. So what that does is, infrastructure-wise, gives us a great platform to grow on. And you look at the project that we won, the overall project for Fleet Solid Support is for 3 vessels for the Royal Navy, for the Royal Fleet Auxiliary to make up part of the Carrier Task Force. And that's the 3 vessels that will support the 2 Royal Navy aircraft carriers. These vessels are really fundamental to get the refueling at sea, the store replenishment at sea done, to keep this task force active. So I think these 3 vessels are in a short time scale. Steel will start being cut for the first vessel in early 2024. We'll move on there to the first ship, 26, 27, and then the final ship coming into service in 31. So it's a really quick fire program. And I think what we've done is, rather than tender that program on our own, we took the view to tender it with Navantia, a Spanish company, and it's the national Spanish shipyard. And the benefits for us with that really was kind of three things. One is we were able to sit under a subcontract, so we're protected from a few of the contractual positions. We're also be able to transfer technology and know-how from the Spanish yards, who have delivered every ship on time, on budget for the last 10 years. Whereas you look at the UK, that's something that's quite a rarity, to deliver anything on time and on budget. So look, I think we're looking to break that mold. But Navantia is also a lot bigger than just about delivering vessels. They're also Europe's leading wind manufacturer for wind jackets. And if you look at our renewables portfolio and what we're looking at there, that also gives us an opportunity to partner for some of those bigger projects that perhaps we don't have the balance sheet to undertake.
Okay.
And I think whilst you look at fleet solid support, everybody looks at the numbers. It's been a massive project. Look, it really gives us a baseline of project work for the next 10 years and allows us to sort of build on that and increase, and really gets us into that position where we're well placed for the next new round of new builds that come out. But also we won a contract as prime contractor before that for M55 project, which is a naval mine hunter upgrade for the Lithuanian Navy, which was around 55 million. And again, that gives us that step up in capacity and capability. And I think we've just delivered our first subcontract for BE Systems, which was a large engineering fabrication project. So I think all these projects coming together, it's just building that credibility up, building the capacity up, and look, we're well positioned for future programs that we're looking at. Yeah.
Okay, that's good to hear. I mean, of course, it is a significant deal, about £1.6 billion. And you mentioned there your partnership with the Spanish firm Ivanti that helps to try and take out some of the risk there, because, of course, as you mentioned earlier, governments change, things change, and they might drop from 3 to 2 ships at late notice. You mentioned about the different markets that you have to help, the 5 markets to help sort of spread risk. In terms of the other markets and anything coming up in those other markets in terms of the shipbuilding?
Well, I think just looking at the government's changing, dropping from 3 ships to 2 ships, I think we did an adequately good job at writing the contract that we won't see a dropping from 3 ships to 2 ships.
Okay.
We think it will be slightly expensive, the same as it was when an attempt was made to reduce from 2 aircraft carriers to 1. So we think we're well protected from that. But as I said, the business is about more than just one market. I think when you look at the cruise market, we've got one 16-ship deal we're looking at for cruise ships. And on top of that, there's another 5 or 6 vessels that we're looking at. We've got some provisional dockings in the diary for next year, and one potential for later this year. And I think that's all about the increasing the work that we do and sort of building up the capability and capacity in the yard. And, part of the FSS programme, there's £77 million been invested into the shipyard. And that really takes us from being one of in the bottom quart of shipyards within Europe to being, in that top quart of shipyards. So it really bodes well for the future. And I think when you look at the renewable market, for example, there's 302 SOVs for that renewable market. There's about 700 crew transfer vessels for that market. Again, we've got shipbuilding capability across all our sites. And I think, some have got Scottish content, some have got Northern Irish content. So the geographical spread of our yards, 2 in Scotland, 1 in Northern Ireland and 1 in England, it really positions us well for that whole. And, if you look at the renewable market, it's 30 billion over the next decade that we believe will be spent on fabrication, structures, jackets, floating wind in vessels. So we're in a great position for that. And with the 3 yards, the 4 yards that we've got, again, all around the coast of the UK is pretty much covered to cover those areas. And I think our pipeline at the moment is extensive over the next 10 years. And, as we qualify and move through to the next stage and the next stage, those opportunities get more certainty. And I think our conversion rate of our pipeline at the moment is about 34%. So I think when you're looking at a weighted pipeline of above 7 billion, it sort of gives you some kind of idea where that work comes from in the future,
Okay, so you've got ambitious plans for the next sort of 5 to 10 years then. I just want to finish off on, I think, a situation that is perhaps a little bit of a concern to investors. Of course, the debt deal. You are looking to secure approximately 200 million in debt. Is that right? What's the situation here, and how far are you along with securing that?
Yeah, well, look, I think at the moment we've got $100 million debt facility. One of the things we're keen to avoid is dilution. Because I think that's the other thing that investors don't like so much. And I think, look, it's a fine balance between equity and debt. Look, we've taken the decision at the moment, and especially when we've now got 7-8 contracts flowing through, bringing revenue into the business. We're not in a hurry per se to put a debt facility, the new debt facility in place. We've got it organised. We're working through the process. But look, it's all about negotiating the best deal. And what a perfect position to be in when you're not hard-strapped, that you're trying to negotiate under duress. We're negotiating under a bit of a position that you were relaxed, saying, if it happens this week, it happens this week. If it's a month down the line, it's not the end of the world for us. So look, I think it's a great position to be in. And I think the cost of that debt long-term for us is what's more important. And I think the economics of getting that debt at the right level. So I think that we've said to the market at the moment, we're looking to conclude that by the end of June. Look, we've made great strides into that. Do we think that might slide another few weeks? Look, it's possible. It's also possible that we might get there by the end of June. It's still early days, but I think, cash is coming through the business, through the projects we've got. We've just placed a £22 million order for our new panel line as part of the fleet solid support contract. So look, I think it's great that all that's going on, and I think it'll come when it comes. I'm not agreeing to terms that are not in our interest in the long term. So I think we just get there when we get there. But I think long term, I think what having that debt facility in place allows us to do is improve our productivity. It allows us to continue marketing the brand on a global basis, looking across the 5 markets that we've got. And look, we think there's some fairly substantial contract news. And, we don't announce every contract, but there's some fairly chunky contracts that we're working on at the moment that we'll look to get in the market in due course, which again really solidifies the position that we've highlighted. I think the numbers for this year were 115 million with 230 million next year in revenue. And I think, by the time we get, that'll get us to the end of a 5-year plan. Then you're really looking at multiples of that. And I think, getting to that 500 million turnover, we've got a clear flight path of how we get to that at the moment. And I think it's all about delivering projects well, keeping a more or less 100% track record with repeat customers, and converting quotations and bids back into solid deals,
Okay. Fantastic. Well, thank you very much for your time today, John Wood, the CEO of Harland and Wolff, and I hope to catch up again with you in the not too distant future on progress of the business.
Perfect. Thanks very much.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.